Quick sound check for everybody. Let us know that you see our charts and hear my voice. We're getting all set up here on the trading floor. Well, not quite the trading floor. It used to be the trading floor. Hey, Robert. Should see a series of 3 charts in a separate chart window. Two time frames for the S&P 500 E-mini and a 30-year bond chart. Right now it's about 9:16 a.m. Eastern Time. Everything we do here is for educational purposes only. Nothing is to be taken as direct trading advice. You're trading at your own risk between you and your broker. If you're coming in and you're new, set up an S&P 500 E-mini chart. We've got multiple layers of this service and we'll go over them. The market opens up at 9:30. Right now it's 9:17. Saul's going to be joining us shortly. When he pops in, he's going to give out this morning's levels. That's the first layer of service. These are Saul's proprietary scalping levels that he's using in his, or looking to use in his trading this morning. Starts out with a pivot and other levels on top and bottom of that pivot. Could be 2 or 3 or 4 on the top, 2 or 3 or 4, maybe 5 on the bottom. Just depends on how he sets his levels. This gives him an advantage over other traders in his opinion. If you're coming in on the outside, join us on the inside. Join us live in Zoom. There's a link. Saul looks to do 2, 3, 4, maybe 5 trades on a good trading day. He looks to bank his money during the morning session based on the combination of his levels and his price action trading strategy. So stick around, get strapped in. Every trading day is different. As you can see by the charts, and if you look back on your charts, you'll see that yesterday was a different market dynamic. The day before was a different market dynamic. When the bell goes off at 9:30 today, will be a different market dynamic than yesterday. Part of the opportunity here is to understand that dynamic and how to deal with that dynamic, how to make sure you're setting yourself up for success today. So the first thing it starts out with is Sol's levels, so be prepared to write them down. The second is his commentary in and around those particular levels. So Sol lays out a roadmap for himself. and he's giving that roadmap out as a example and a way to start to understand the power of this service and what the opportunities are to develop consistent profitability by focusing on price action in and around, in this case, Sol's proprietary scalping levels. It's a very simple proposition. I call it sort of like a wax on, wax off, type situation where you're learning the fundamentals of price action, which have been around for a long time. The entries, exits, and stops in and around a particular area could be around Sol's pivot or his other levels. And the what to do, where to place your stop price, where to enter a trade price, and what's your exit strategy on a trade. Hey, Maureen, welcome back. Hope everybody's doing well. So the point here is that if you're looking to do 2, 3, 4, 5 trades, be able to bank your money and be I don't know, a trading professional, and you want to do this in a controlled, professional manner, then this is the place for you. So this is the zone where Sol pops in, so he could pop in at any time. If you haven't signed up for Sol's monthly, do it now. If you've been in for a couple days and you haven't signed up, it's 25 bucks a week. It's a little bit of it's really a test to see who's interested and who's not. It is mandatory. If you are a part of Sol's class, so the 3 levels of service are: you come in as a guest, you transfer into a monthly, you sign up for his monthly, you become part of the family. Then you have the opportunity to talk about Sol's Intensive, where he takes you under his wing and he teaches you personally, brings you into private class, teaches you his methodology, how to execute that methodology. So this is a opportunity that you either take up or you don't. Sol's pedigree is he's a 25-year CME Group floor veteran. He'd still be on the floor if it wasn't for the pandemic. He's actively scalping for his own account, utilizing his price action trading strategy. And that's what we're going to do this morning. If you have any questions, don't hesitate to post them in the chat area. Sol loves questions. And we're here on a daily basis. And we used to say live from the trading pits in Chicago in April. Right now that was April 2020. Now it's 2021, and it's almost the end of January 2021. So if you haven't figured out your trading yet, let's get going. So I'm going to send out to everybody the opportunity to sign up for Sol's monthly. I'll go through the list and see where we're at. I'll send it out to everybody. It's coming out to you now. Take a moment, sign up. If you get exited, I'll give you our telephone number in Chicago. It's 312-685-2582. That's 312-685-2582. Hey, Bernard, welcome. Anupam, good morning. Ian, Frank, Fred. Hey, Fred, you were asking about Sol's mentoring yesterday. you want to spend a couple minutes on the phone, let me know. Hey, Kurt. Hey, Mark. If I miss Saul coming in, let me know. I should hear him today. Hey, Oscar. Peter. Robert C. You know, for those that had taken Saul's course in the past, make sure you're signed up for Saul's Monthly. It's a requirement in 2021. I'll send it out to you so you have it.
All right. Good morning, everyone. Can everybody hear me all right? All right. Fantastic. Let's give you our levels for this morning as the market here is kind of sold off here after European markets opened up. And we'll see what the day brings. Pivot this morning is 3802, 3802. Support down at 91, 3791, 80, 72, 65, 58. Resistance above at 14, 23, 31, 41, and 53. Pivot 3802. Resistance at 14, 23, 31, 41, 53. And then support below at 91, 3791, 3780, 72, 65, and 58. All right. Interesting kind of sell-off here after the European markets opened up. We'll see what the day brings. Today is F day. For those of you who don't know what an F day is a Fed day. Fed is going to be releasing the results of their meeting, two-day meeting, at 1 o'clock Chicago time. So probably, hopefully, we are not around. If you are around, then you're just watching because nobody wants to be around when the F day begins. And then at that's at 1 o'clock, and then at 1:30, they take the press conference with Powell, and they have a little question and answer session. So that'll add more to the volatility in case he says something a little off kilter. The wording of the statement that will be released at 1 o'clock is what the market looks at. Usually, the statements are consistent from one release to the other, except every now and then they add or subtract a sentence or a word, and that creates amazing volatility sometimes. So that's what is going to happen at 1 o'clock Chicago time, followed by the question and answer at 1:30. So that last hour and a half of trading, again, it's going to be whipping around crazy, and not a good place to be around if you're a trader, only because it becomes very volatile and whippy. Whippy. That means whippy. All right. So that's a warning, just because it's we don't like to trade F days. That's all I'm saying. No other economic fundamental news are going to be released during the day. We had durable goods come out already, and that'll be about it. So not nothing else after that. All right. So let's see what happens here. Again, we are welcome to our room here. We are trading mini S&Ps here. We use the levels that we printed out here in the chat box area as a guide, kind of a kind of a guide for us for the day. And then we let the price action opportunities, once the market paints some bars, dictate some of the opportunities after that. So a combination of using uh, levels plus price action opportunities allow us to put together a methodology to trade mini S&Ps, and our goal here off of our trades is to scalp them, and we scalp them for about 2 to 3 points on our trades. So that's with some one that's normal volatility. I think today, considering where we opened up and the volume overnight, maybe your stops maybe should be extended a little bit here, looking more to 4 or 5 points at this point than um, than 2 to 3, only because seems something might be brewing, just as an FYI. And if it's a little bit too volatile for you, just be patient and wait for um, something else to occur. If somebody can reprint the pivot, the levels for us this morning, there they are in the chat box area again. And if anybody has any questions, please feel free to ask. All right, so you can see here the volatility here is extreme, and at least on the downside. I haven't really. I think they're concerned about the market is lower here because they're concerned about the amount of the stimulus, as more people are getting to sound off against the number. The market liked the 1.9 number, but then now there's some resistance against it, and consequently there is some little pushback here in the market in regards to the the amount. And so the market's been very buoyant here because of it. So consequently, it's concerned that that number is not going to be reached. At least that's what some of the you know if somebody had to give us a reason why this is happening, maybe that's a logical reason a little bit. That's what I heard this morning, but who's to know? That's all the talking heads are saying. But as you can tell here, with push to the downside, you get added volatility, right? And that's always the case when the markets seem to be put under pressure. Patience is important. Waiting for the opportunities to present themselves is important. We kind of, again, you kind of ran through there to 91. I would not really, again, it was, unfortunately, I had to get off here for a second when that happened, and I couldn't talk about it, but we quickly continue to downtick here. So be careful if the volatility is a little bit too great, or we're in the first, bar here, and some of our traders don't like. All right, that's a nice little quick. And you got to be fast with this stuff right here against our 80. Did get down to 80 and a half there, and popped it right back up. So our entry point there at 80 and a half against our 80, or even if you got in at 81, given the fact that it's given the fact that it's hopefully you are adjusting your entry points with the volatility here, and how you are trading this stuff. You don't have to um, scale in a half a point above and below, maybe a point and a half above and below, as the market is getting some legs here this morning. And nice little rotation there off of the 80, but you had to be very fast there to or take any profits there. It went up to 84 like in a second, 84 and change, and pop right back down. So you got to be quick here, especially in the morning, especially the first couple bars. And if it's a little bit too volatile for you, just hang loose. You're always going to get more volatility the first couple bars, especially when we opened up our gap up or down a little bit. That's what usually happens. Can somebody reprint the levels in the chat box for us? Thank you. There they are. So again, patience is important. If the volatility is a little bit great, but again, you get the opportunities both ways, right? You're going to get them. You're going to get quick moves one way or the other, and consequently, you got to stay focused and don't lose your discipline, and be quick. it's about the only thing I can say. You got to be. Sometimes you got to just be a little bit quick, and it's hard to be quick when the markets are, bouncing around as quickly as they are, especially with these computerized algorithms that are in the background controlling the market. So, but we try to do our best. I mean, the thing is with this kind of market, you get quick risk rewards, but if it's too much for you because of the volatility, just be patient and wait for it to settle down a little, and then you'll be able to trade at a calmer pace. Right. So we bounced off of the 80 very nicely here, and we had a nice, even if you got the lower end of the range there, it did go down to 77 and a half. So if you did get scaled in maybe at 79 or something, you did a nice rotation back up, got all the way back up, and then came back down here. So you were getting the moves. It's just a matter of scaling in the right way, being patient. Well, you don't have to be patient. You just got to be just a little bit on your toes here, and trade as the market just quickly is whipping around. At least initially, things will settle down. All right, now it's like the bears are winning this argument for the time being. Next level on the downside that we have is the 72 area. Full moon change in trend. Yeah, well, the Moon Man is definitely one of our. We do have a Moon Man, by the way. The Moon Man is a person who always gave us the lunar trades that we have to look at. Yeah, he said we have a new moon. He's right. You're right. Yeah, the Moon Man confirmed. Where is the Moon Man? The Moon Man is in Texas, wearing his big 10-gallon hat on a farm there. My friend Don is the Moon Man. He is a lunar specialist. We don't try to promote him too much, because then he gets too many calls, and so we just kind of keep it quiet, but just between the folks that are in the room at the particular moment in time. So right, we continue to downtick here. And besides that, we can't have like Don's popularity exceed mine, right? After all, I'm the one who's talking here all the time. Don's very popular. Give him another title, Moon Man, and he's going to be signing autographs soon, people. So let's. And I know he likes his volatility, so we're good. Oh, I'm surprised he didn't know that. Yeah, he's the Moon Man. You should see some of the pictures he sent me. They're amazing. Of the moon, I mean. All right. Market very, very nervous down in here, but creating a little bit of value here around the 78 area. Let's see if it'll continue to this will hold, or we'll have another jaunt to the downside. All right. So we continue to downtick here a little bit. Again, if the volatility is a little bit too great, you're concerned about it a little bit, just relax, wait. Things will slow down. You'll get a little bit more consistent ebbs and flows if the volatility is a little bit too much. And it happens. I mean, some of our traders are a little risk averse, and sometimes they don't like the volatility. So consequently, you have to just kind of let the market kind of settle down a little bit, and then trade it accordingly as we come down here to the 72 area. See what it wants to do down here. Again, scale in a little bit differently if you're going to. If not, just to take in 1 point level because the volatility is too great, then that's fine too. Just be patient. And keep your stops in, as the market is definitely excited this morning for whatever reason. And we talked about some of the possible reasons before. Coming down here to the 65 area now. Again, it's keep your stops in no matter what. We don't love a trade, no matter what, how we look at it. And it is moving around, man. You got one chance at something. Otherwise, you get bamboozled here. All right, so it's a little rotation there off of a 65. Maybe you guys doubled up there against it because of the volatility, and we're coming rotating back up here very nicely. So it was a nice little trade there if you did. And again, remember, the volatility is great, so your stops have to be extended just a little bit, and only because we're not doing it because we want to. We're doing it because we have to, because the volatility is there. And if you can't, if it's a little bit too much for you, just be patient and let the kind of this initial burst play its course here as coming back up here. So hopefully you're able to maybe double up there against the 65 as well, and you're getting a nice rotation here off of that bounce from that level. If you got out, got back in, either way, you should have been able to take advantage of that 65 level. It's just the nature of the beast right now, and nothing wrong with that as long as you understand the volatility and what the risks are. You have to adjust your trading level of risk to the market, because the market doesn't really adjust to our level of trade. The snow is there. Got it off my driveway, so that's a good thing. All right, we continue to downtick here. Next level we have is 58. Let me give you a couple levels below that, because again, I don't know which way these markets are going to go. We got 65, and then 58, and 44, 32, and 23. 44, 32, and 23 below the 58. All right, again, you can only, I can't say it enough times because it is kind of moving around very fast, and if you can't handle the volatility, just let it be for a little bit. Things will settle down, and you'll get some more calmer trade. If you're in there trading, obviously, you know that it's whipping around quick, and if we run through a level, you have choices there to get out and get back in at the next one, because we ran through one, got right down to the other one. If you kept them both, then you got a nice quick rotation there off of those two levels. And we don't like to double up, but again, we're only doubling up only because we have the market, but you have to know where your stops, and there's definitely a risk reward here. And if it's a little bit too much, too risky, get it. Be patient. If you look at the chat box area, we reprinted the levels with the additional numbers that we have. So we'll see what's going to happen. We are always at the mercy of the market, right? We are not. We wish we had some kind of crystal ball that told us this was going to happen over yesterday and then this morning. We don't. So we take what the market gives us every day and try to trade it. Sometimes it's slow, sometimes it's quick. Obviously today we have multiple opportunities quickly. Every time I give you new levels, extension of either upside or downside, we're kind of busy a little bit here. So it is what it is, right? So we'll see what the rest of the day brings. Bonds here upticking a little bit. I had concerns of the fiscal stimulus coming from Washington. We'll see what the Fed chief says today. So we'll see a whole bunch of interesting concepts here. The market continues to downtick. You get selling pressure along the way, and again, just kind of wait for those levels. The levels are not, you know, are there for us to try to take advantage of them. If you whipping around too much or there's too much volatility and you can't take the heat, just be patient. I keep saying that because it's important to understand that. All right. And there's a few of our traders who, you know, love this, and then a few of them hate it. And just that's the nature of the beast. Like I said yesterday, I said that I can give the same amount of information to 100 people, and 30 will make money, 30 will lose money, and 30 will scratch. So that's this is where we're at right now. All right. So we got down to 61, bouncing back up. We have the 58 area. Still under a little bit of pressure. Nice break here. We kind of went and retested that that spike from a couple days ago. Kind of held there overnight, and then once we got through it here, kind of opened up the door to this downside trade. Still under pressure. We got support down at the 58 area next. Pretty much flat right now. I don't know if we. It's hard to say you wanted to get short anywhere besides up on top. And really, we kind of let the market kind of dictate where our entry points are going to be based on based on price action. So it's kind of hard to say that we could have jumped in. You have to really believe that we were going down, or you could have sold any one of those quasi rallies that they had if you were trying to find an entry point. But again, we like to let the market kind of tell us where those levels are instead of guessing, especially when it's doing what it's doing right now. Okay, there's another leg down. Seems like every time it gives a new low, they have that oof, that follow through, right? Makes sense because people are watching, they're kind of keeping their stops against the new lows. Doesn't mean we're going to go through. It just means that it's, you know, how much we're going to go through, but I don't know. But that's why they get these little extra flushes to little newer levels. All right, so we bounced down to 59 there, 59 and change. Again, depending on how you're scaling in, maybe some of you were able to get that. Again, you're not scaling in half a point above and below, like I said. That's more like 0.2 points above and below. So maybe some of you were able to get that and get a nice little pop back up here. And so we got down to 59 and a half there, pop back up. So we had 58. So now that 58 level becomes a little bit more tenuous, as we almost got it right. Again, if you did scale in a little bit differently, maybe you were able to take advantage of it. And like I said, you're not scaling in a half a point above and below with this market. Just as a point is at least 2 points with this thing. The way it's moving around is probably a little bit more advantageous to you than anything else. Only to keep you in the game, only because of what it's doing, how it's doing it, so on and so forth. So keep that in mind if you're trading. All right, so nice little push back here. We got down to 59 and change and came flying back up. If you did extend your entry points, then you did okay. There's, there's no right way or wrong way of doing this. So, if you're doing it a little bit differently and you didn't get filled, that's okay. Just understand that on the downside, you're probably going to hit some stops especially since we're having this nice big pop back up here. So you're getting 20-point moves in 5 minutes. It's a lot. Really, only good resistance we have right now would be back around the 90, 88 area, 88, 90 area. Continue to pop back here. Nice rotation there off of the 59 area. VIX is way up there, right? It was trading down in the low 20s. It's up to 27. And 27 and change. Yes, I am trading here. Sometimes I kind of not say anything because maybe I'm trying to work out of something. But yes, I'm trading here in the background, trading the levels that we gave out, trading the commentary that I'm giving. I am watching the market and doing the same thing that some of you are doing. So that's what we're doing here. We put together a trading methodology that encompasses the levels that we gave out early this morning, in addition to the price action opportunities that might occur once the market paints some bars. And obviously, at this moment in time, the volatility is great, and so we have to take into account how you enter your trades and how you're scaling in or scaling out of your trades. And so, yeah, I'm trading with you. I'm trying to, I think, tell you how to get in some of these and how to get out some of these. Keep your stops in. I think I said that we bought the 72s and the 65s. Maybe that's kind of, even though it's not because of the volatility, it's not obviously you have to extend your stops a little bit sometimes because it moves so fast. You don't have a choice sometimes, especially if you're using a finger stop versus a mechanical stop to get out of something before it gets to your next level. and obviously you're taking a lot more. Um, there's a lot of drawdown in some when the markets gets like this, but then again, you do have a snapback, given the volatility. So it's not something that we teach. It's not something that I like to do, but it is considering the market volatility is so quick. But if you are more risk averse and you want to wait till the market settles down, then I've been telling you that all morning. Just kind of wait for the market to settle down, and then we'll get some quote unquote less volatile, more normal trade to give us other opportunities later on. So again, everybody's got different risk tolerances, and so I try to make sure that we adjust everybody's risk tolerance. Uh, I don't. I don't like to post trades only because not everybody does the same thing. Not everybody enters the same way. Not everybody has the same risk tolerance. I work with individuals to try to understand their risk tolerance and then try to adapt some of the concepts that we teach to your risk tolerance. But to say that somebody's going to make the same trades I make is really not fair to somebody else who's going to do trades a different way. And so, and there's, like I said earlier this morning, there's multiple ways to trading. There's not one correct way of doing it. You have to find a way that's suitable for you, that you can adjust to your risk, to the market risk, to the volatility in the market. And today, obviously, we're moving around a lot quicker. Other days, a little bit more confined, and the trade is a little bit more. You have moments where you have time where you can actually look at a trade and adjust the trade, and but not now. You're today, at this moment anyway, you're having to react very quickly. So to say that I want to post my trades versus post your trades or versus post to somebody else's trades, I mean, well, I'm saying the same thing. And like I said, everybody's going to take it a little bit differently and trade it differently. So it's really not fair to post wins and losses. Obviously, you know that if a level kind of runs through it, that it's not going to be a good trade. But then again, if you bought the 65 underneath it, you got 10, 15 points. So I don't know, did you take a 5-6 point loss on the 72s and then bought the 65 area and made 15 points on that? And I'm all saying those numbers only because it's happening. So it's kind of hard to quantify it at this moment, given how the markets are trading with the volatility. All right, we said a little bit of resistance right in this area here. Let's see what the market wants to do. If not, just keep your stop in. The other good resistance we have is up at the 95 area. All right, so again, market rotating back up here, a little resistance right in this area up to 90 to 95 area, anywhere from 88 to 91, and see what it wants to do in here. If you're looking for a place to sell, the other better level will be up at 95, anywhere in this little area here. Let's see what it wants to do. Anything above the 96. All right there, Robert. Sorry about that. Again, obviously just a little bit of resistance right in this area here. As you can tell, market is kind of stalled a little bit. Um, when the Fed Open Market Committee (FOMC) ends its two-day meeting this afternoon, Fed Chair Jeremy Powell um, is likely to assure investors that the central bank won't taper its asset purchases anytime soon. Recently, Powell repeated his "We're not thinking about thinking about. We're not thinking about thinking about." Reducing the quantitative easing or raising rates as pandemic weighs on the U.S. economy. When it does become apparent to discuss specific dates for tapering assets, we will let the world know, he said in January 14th online Q&A. Even as population starts to get vaccinated, COVID-19, it will take months before it reaches the point of herd immunity. The emphasis will be on we're not out of the woods yet, said economist from UBS. The Fed was considering reducing bond purchases in 2013, which led to infamous taper tantrum. Caught the market off guard with those commentaries and pushed long-term rates higher. As the market slowly upticks here, a little resistance right around this little area like we talked about. We're getting a little bit of movement back and forth around it. Let's see. The Fed is currently buying $80 billion of Treasury bonds and $40 billion of MBS's, mortgage-backed securities, each month to keep longer-term borrowing rates low. It has said it won't curb those purchases until substantial further progress has been made in achieving low unemployment and an inflation target of 2% a year. And with the shift in inflation targets averaging, the central bank may let inflation run over 2% for a period of time. So again, like I said, we have the little resistance right in this area here. If you are looking to sell the market and scalp it over here, you are getting a little bit of an opportunity. One economist from TD Securities expects Powell to stress that the Fed won't increase rates until inflation accelerates. We expect him to emphasize that inflation will be key. As a nice little rotation here off of our blue band area there. If you are trading it, scalping this little, like I said, little resistance area here, we are getting a little bit of ebbs and flows against it, giving you a chance to scalp this little market here against this little resistance area. Again, 2 to 3 points on these trades easily. So these opportunities you're looking 2 to 3 points. The other levels when the markets are, the levels you have to almost give a little bit more space to, just because you have to. All right, so hopefully you were able to take advantage of the blue band there. You got an out above 95. I would be out of any shorts if you're looking for a stop area. So anything above 95, you want to be out of any shorts. So if somebody's asking me if I'm trading, I am. This is my sell area here. Right. So, all right. So let's see. Man, I do. Sometimes you got to listen to what I say because I'm not That's and this is a price action play here against this level, which was those earlier. That's where we kind of started to fall off. So the market's kind of happy it got back up here. There's some traders probably are happy that it's back up here, who are probably either scratching some trades or taking a little bit of profit, depending on how you look at it. But obviously, there's a little resistance up here. Get above 95, I think we rotate a little bit higher. Maybe that was interday highs at around 6. But then we'll start looking at the upper side, upper resistance levels that we have at 14. But 95 is your exit strategy for any shorts. We expect Powell to emphasize that inflation will be the key when the Fed exits from low rates begins, and the Fed's and most Fed officials are skeptical that a few strong quarters for growth will suddenly lead to a meaningful pickup in the trend in inflation. Powell's statements is at 1 o'clock, followed by his Q&A at 1:30. All right, again, we are trying to take advantage of ebbs and flows of the market. We had a nice pop there. We got down to 59 and change there. If you, again, depending on how you're scaling in, and I suggested you were not scaling in a half a point above or below with this market, and even a point is a little bit too tight. Maybe you were able to get the top if you got 2 points scale. Again, if it's too much volatility and you can't trade it because you have to take too much slippage or too much heat, depending on what terminology you want to use. We call it heat in the business. Slippage is what the firms like to call it because it's a technical term that they came up with because computerized people like to use technical terms. It's just heat. How much heat you want to take in the kitchen. When do we get the new Fed person? Well, first of all, you have to, the president has the ability to make those determinations. I think every 4 years they're up for renewal. Trump put Powell in a couple of years ago. But the president, whoever the president is, can always put in a new Fed person if the Senate agrees to it. All right, so again, nice rotation there off of this little resistance area that I said we have. I gave you your exit strategy above the 95, so you could see how much risk you want to take, and hopefully you're taking some profits here against resistance area. And if you want to stay short, still anything above 95 out of any shorts, but you're you want this thing to turn over. Maybe it will, maybe it won't. I don't know. But but you definitely have to take some profits off because that's what the day is all about, is taking some profits. That's off of this little short area here. Tech sector remains light after earnings of Microsoft pushed Nasdaq futures higher overnight, though the contract linked to the Dow and S&P fell 0.4 and 0.2% respectively. So we still have Apple, Facebook, and Tesla are all going to come out with their earnings, I think, later on at the end of the day today, if I'm not mistaken. It doesn't tell me the dates. But obviously, those are still going to be market movers, especially in the Dow. And we are in earnings season, so that could be a nice little factor there. So we're getting a nice little turnover here of this little short that we are trying to hold on to here. You're getting a nice little opportunity to get a little bit more out of this trade than before, I would probably cover them right around here, unless you have a trailing stop. If you have a trailing stop, anything above 90, I would be out of any shorts right now. So if you adjust your trailing stop to 90 right now, probably be where I would look. But again, I would also cover them down there if you had any left over, or if you were looking for an exit, that would probably have been it down around 94, 90, 84, 83. But it was a nice little trade there against that little area of resistance that we suggested the market might have. Again, we are not guessing. We think that the market might have some good resistance in that area, and it was based on the work that we do, logical reasons to trade, and things have settled down. So the market is trading a little bit more "quote unquote" normal, whatever that means. At least it's bouncing off of support and resistance areas that we see that the market should. Obviously, when it gets a little bit more volatile and there's a lot more volatility that's inflicted into the market, you know, the levels become a little bit more tenuous because of the drawdowns that are occurring, or slippage, or heat, or whatever terminology you want to use. All right. So again, if you're trying to stay short, anything above 90 out of any shorts. But like I said, hopefully you took some profits down there around the 84 area, and just kind of see what it wants to do now. So things have settled down a little bit. And like I said, it always will settle down. Hopefully we're able to maybe take advantage of that little short area that we suggested. All right, fantastic, Maureen. So good to hear. Did you? How many? How much did you? How many points did you take off of it, if I might ask? Perfect. Very nice. Good start. You were very patient. You were very patient there, weren't you? You waited. All right, good job. Good job being patient and waiting for the trade to create itself. All right, now we're out of any shorts that we might have had. Anything above the 95 out of any shorts overall. And like I said, hopefully you covered them down there at the 84 area like I might have suggested. If not, then you're definitely out of any shorts right now. As the market continues to uptick, like I said, if we get above the 95, we do have a chance to go and retest those intraday highs against the 6 area there, but then we'll look for the upper resistance there at 14. This might be interesting. I might have to give you levels on the upside. That'd be kind of interesting. You just never knows with these markets, right? You just never knows. All right, a little bit of a buying opportunity here above the 95. If obviously, if you don't want to be short, you could almost imply that you're maybe trying to want to be long. So just suggesting, and that is a buying opportunity here above the 95 area. I mean, that's what the opposite of you don't want to be short is you want to be long. So maybe that was a buying opportunity there for some of us. This is where we not only have counter trend trades, but we also look for momentum trades, and that was definitely a momentum trade right there. Okay, like I said, if we're trying to stay long here, we'll look for a push up. Obviously, you can take your profits along the way, right? We suggested getting out of any shorts around 84, and that was the place there that held. And then now we continue to uptick here. We suggested out of any shorts, which also could mean you could get long there above the 95, looking for a push higher. I suggested we might go test the 06. So, and maybe it could have been a place to buy them there. And obviously got to take some profits, right? I mean, we're not going to get, 4 or 5 points out of a trade and not take some profits. All right, we float back down here a little bit. This is where we wanted to, be out of any shorts. Also, possibly maybe get long if you were looking for a place to buy it for a rotation up. It's amazing how you wanted to be short a little bit ago. Now we want to be long. It's just dynamics of the markets have changed a little, so you have to take that into consideration. We are trying to find the opportunities here by scalping the market. So obviously, we're not really looking for any trends. We're just trying to take the opportunities that the market creates for us and scalp the market. That's the kind of the idea here versus, oh, well, did you get short this morning? Did you catch that break? I mean, if I knew we were going to break, 40 points, I would have told you that. I really would have told you that in the morning. When we started, I would have mentioned it to you, and I hope you would have mentioned it to me if you knew. That's all I'm saying. So if somebody could tell me that they knew it was going to break 40 points after we opened up, I hope you would have shared that information, because I know I would have shared that information with you guys if I knew. So the point is that we don't know what the markets are going to do every day, and we don't know what the market's going to do intraday. We can just trade the opportunities that a market gives us, given the volatility, given the price action. And that's what we kind of do here every day. And sometimes we get more volatility, and sometimes we get less, and sometimes we get a whole bunch of fun, and sometimes it's not so much fun. But hey, but we have to trade what the market gives us every day, and that's the beauty of what we do. Also, sometimes it's not so straightforward, like going sitting behind a desk and doing what you have to do for 8 hours, getting a paycheck. But it's a different kind of business. So, as somebody told me before, it is the hardest way to make easy money. Right? That's the truth. When it starts going your way, it's fun. Obviously, when it's you're taking the heat and the drawdowns, and it's a lot tougher, and so it plays on your mind, and that's why you have to hopefully stay focused and take whatever the market gives us. So again, if you did maybe bottom down there at the 95 when we rotated down there, getting paid off here a little bit, I wouldn't touch it this time around. I'm hoping that if you are long, we get a push up, maybe up to that 06 initially, and probably we'll look at the 16 after that. Again, if anybody has any questions, feel free to ask. I don't mind questions. You put them in the chat box area. Um, we share the questions with everybody. And try to answer them as quickly as I can. Can we put up today's numbers again one more time for us? If you look in the chat box area, you should be able to find the levels. Maybe. There they are. Whew. Thank you. The chat box area is where the levels are printed. You can get those if you haven't gotten them. We gave those earlier. Obviously, we kind of ran through a few very quickly early on. We had a nice rotation off of that coming up here to, well, first we had the 82. We had the resistance right here at the 88 to 91 area. And the market kind of stopped there, gave us a nice rotation off of that level. Nice. We said we suggest to cover any shorts against the 84, and then continue to push up here. Said if we don't want to be short above at 95, which is also could have been a little buying opportunity early on. I wouldn't, like I said, probably will not buy it this time around. I gave you a couple times there to buy them, but it seems like that's a little area here that is holding. And trying to see if it wants to get through or not to the upside, and then we'll get up here and we'll go retest this 06, and probably go retest the 14 after that. All right, so nice little trade there for a couple of good trades. Obviously, with the couple levels there, we kind of got run over on a couple of them. It all depends on how you traded them. And as we continue to uptick here, again, trying to keep you a little bit long here, given the way the market is trading, and our consensus. Well, right now the market is getting a little. We're trying to keep you on the long side a little bit. Anything below 88, you want to be out of any longs. Well, they are whipping this one around, right? They made a new high by a couple points and then flushed it all the way back down here. Volatility is still here, still kind of bouncing around very fast, so be careful. Somebody said something. Well, now we're back in here, right into this a little area here that really we have no clue what it wants to do right now. So we're out of any longs. We are just kind of now it could go either way. Literally could go either way right now. All right, so we're kind of very neutral right now. Just be patient. Kind of no trade zone right now. Like I said, could do whatever it wants. Could go multiple ways here. All right, as you can see, things have slowed down a little bit. So just be paid. This is kind of tricky right now. The market is under a little bit of pressure, but then rallies, then comes back down. So we really have no idea where it wants to go. I think below 80, maybe rotate down a little bit lower. And I thought we were going to go retest that oh 06, but something happened over the last 5 minutes and pushed the market down very, very quickly there. And now we're chopping around here in this little area that's pretty much could go market could go either way right now. So be patient, kind of let the market play itself out here a little, and then we'll see where we want to go. We got resistance. Well, let's take the resistance up at the 14 area. That'd be our next good level of resistance, which is the first level we have. On the downside, like I said, if we get below 80, we could go retest. Well, 75 is first, and then we get that below that, we could retest maybe go retest the lows there. So we'll see. I don't know, but this is a tough little area here, suggesting just kind of price action could go either way. So we have no real good idea, and you can tell by the market is just chopping around here. It doesn't know what it wants to do either. Anybody have any questions? Put them in the chat box area. I'd be glad to answer them for you. Why 5 minutes for what? Well, I think it gives us good opportunities when it's not so crazy, when the markets are not so crazy, when 90% of the time when things are more controlled trade, it's a good time lapse for us to give the trade a chance to work itself out. Obviously, when the markets are whipping around like they are today, um, you know, it looks like a minute chart, but yeah, but when trade is quiet or how it is most of the time, a 5 minute bar gives us a good reason to stay in a trade for that certain amount of time. We work around those parameters, and then uh, we kind of if something's going to work out for us within 5 or 10 minute bars, it's a good. That's what it seems to work out better for us using that, and also keeps us away from over trading. Sometimes if you're trading on a 1 minute or a 3 minute, which today you don't have to really look at those. It's tough to look at those bars on the 1 minute or 3 minute when it's moving around so much, but it also keeps us away from trading so much more because we kind of pick our spots. We let the market kind of absorb what it's doing and then go from there. Why not candles? Hey, you ask me a lot of personal stuff here. Why not candles? Uh, because I like the way these bars look better. Literally. And it doesn't mean that candles don't work. It doesn't mean that people who use candles don't like it. I never got into candles. I never. I don't know. I've seen bars like I've had them. I've seen them. I don't like them as much. That's all. But it doesn't mean that other people can't use them. I personally don't like them. All right, we seem to have held our blue band there and come back off of it. Again, the market is chopping around here a little bit. All right, seems like we held it where it was supposed to hold, and this, but again, it's getting a little bit choppy. Kind of again in this like no trade zone. It might be a 10-point no trade zone, but it is a no trade zone. Kind of tough to figure out, uh, which way it wants to go. Yeah, the problem is when it gets like this, Steve, is that it just, you think you got a good trade and then you just get, like I said, get stopped out. It gets very choppy and it moves 10 points, 12 points at a time. And this morning it was probably moving about 15. It gets a little tough. There's no doubt about it. There's no right way to doing it. And you're not trading just to trade, you're just trading the market. Unfortunately, it's usually on a normal day that's usually okay. But because of the volatility, it chops you, it stops you out. So it is what it is. It's just the trade, and it doesn't happen often. Not like this, but it does happen every now and then. And I don't know if it's like the worst thing. I think you'd rather like the volatility than not. All right, we seem to have held our blue band area there and taken its time to come back up here. Bonds rotating to the downside a little bit, maybe uh, trying to keep you a little long. Of course, they got it down to right around that 88 level and got us out, and then decided to continue to rally. Again, just chopping around here, so be careful, be patient, wait. Next level on the upside, we have the resistance is up at 14. Um, hmm, like I said, we I don't know, get below 80, we might rotate down to 75, and below that down to 70, and maybe down to the lows down at 60. So right now, it's just kind of finding it's creating some value here. Kind of the same area it was overnight a little bit there for the last couple of hours before we opened up. Not surprising. Get above 8, 9, look for a push up to that 14 area. We got support will be back. Well, again, we're in a little no trade zone here, so just be patient. It's not rallying, it's not breaking, it's just chopping. Oh my God. My friend just texted me that same question. Is it time to buy puts on GameStop? That stock has become everybody's talk of the town over the last 24 to 48 hours. Literally just sent me a text about some of these options that he's looking at. But you got to pay one hell of a premium. The $100 puts are trading at $43 with 52 days to expire. That's ridiculous. Right? 52 days to expire and it's trading at $43 for a $100 put. So there you have it. It's funny. Yeah, I know. Nobody's. It's just funny that he mentions it to me, and I got a text from my friend saying the same thing. And then somebody else in the room said the same thing. I'm just laughing. Basically, if everybody's looking at puts at the same time, it's not a good idea. Everybody's thinking, okay, this is it. But it's one of those stocks that you just got to stay away from because it could rally another $500 or go down to zero. And who knows? I mean, who knew that it didn't do anything for like 5 years. It's traded in like a very narrow range, and all of a sudden everybody wants the stock. Come on, it's crazy. It's what happens with when you give people, you can go buy stocks for a dollar or two. Everybody wants to do it at the same time. Maybe they'll come out with their own crypto soon. Maybe. Hey, if you thought this morning was bad trading with the volatility, go trade that stuff. Go ahead, go trade that stuff if you want. If you want volatility, go dip your toe with GameStop. Go ahead. If this wasn't enough for you today, you go to sleep with $100 profit, you wake up with a $200 loss, or vice versa. All right, as you can see here, we'll keep chopping around. So definitely not the place to be trying to find a trade. Nothing wrong with waiting. being patient. We saw how we waited for the our sell there against the 80, the 90, 91 area, and then we had a nice rotation off of that, and then we had a little bit of a buy there above 95 early on, and we had a nice little rotation off of that. And this is where the trade comes back to quote unquote being normal again, and you can just be patient and wait to see what the next price action opportunity is going to be. Our levels, we have resistance at 14. The downside, 50. Well, because we went down to 59 and change, the 58 on the downside is probably not doable anymore. I would probably look, maybe go retest it, maybe. I would probably look for 44 as a good support level on the downside if we, start breaking down to that area. So who knows? All right. Well, definitely things have calmed down a little bit. Nothing wrong with that. We focus more on the morning hours to help us with our trades. We feel that we get some good ebbs and flows during the morning hours versus the late afternoon, especially today with FOMC releasing their results from their meeting, and then consequently afterwards, he's going to have a Q&A with the press, which could lead to more volatility. So it becomes a little bit more more like what we had this morning versus anything else. So it gets a little bit more crazier. I think Apple comes out with their earnings after the close today, if I'm not mistaken. So that could also create some volatility in the market after right around three, right after three. So take that into consideration as well if you're going to be trading. Definitely this afternoon, the market could be flipping around a little bit. We gave you levels to the downside, more levels to the downside. Uh, Again, they, just if you're going to trade late afternoon, I'd probably look at those more than anything else. If you're going to do anything, the choppiness or the price action opportunities in the afternoon becomes a little bit more, not as, they're a little bit more tenuous, a little bit more, a lot more slippage and less people trading. So the opportunities are could be all over the place there. So be a little bit. That's why the afternoon trade becomes a little bit tougher. But again, we kind of try to tell you the risk that's involved in some of these, whether it be time or some of the trade later on this afternoon, so that you can either understand the risk and decide whether you want to trade it or not, or just kind of, if you're going to trade it, then be a little bit careful around it and lower your number of contracts, because it's going to be moving around a little bit more. Like, this morning you don't have to trade as much because the markets are moving so much. You lessen your contracts and lessen your the risk that you have out there, simply because you have to be a little bit careful. That's all, when it's going around and doing the things that it was doing. Um, all right, guys, you can see this is definitely Chop City. Just kind of going both sides of our, well, just kind of just floating this little 10 point, 15-point range and getting a little bit choppy, and not too surprising, as the market's really trying to decide what direction it wants to go next. So try to keep you out of this little trade here until the market kind of decides. We gave you the parameters on the upside, parameters on the downside. We'll take a little bit of a break here and see what happens, if anything happens, or maybe something will. But again, be careful later on this afternoon if you're going to be trading with the FOMC stuff at 1 o'clock Chicago time, and then followed by the Q&A at 1:30. All right, take a break. Come back in a bit.
Hey, a couple quick programming notes. Wanted to welcome the new people joining us as guests. Welcome aboard. I've got an opportunity for you based on Sol services on a daily basis. I'm going to send it out to everybody in the chat feature. It's usually $379 a month. Right now it's discounted to $100 a month. It saves you $279, which is 25 bucks a week. Hey, Christina, welcome. Hey, Fred, you had mentioned that you might be interested in Sol's mentoring and his coursework. Just let me know back in chat. Hey, Greg H. Jeremy S. I sent it out to you. Hey, Linda, did you ever sign up for Sol's monthly? Linda K. Newtan B. Welcome. Hey, Prasad, I sent it out to you yesterday. Let me know if you're going to do it today. Just want to make sure everybody is set up properly. If you have any questions, if you need a trading platform, there's a lot of opportunity here for new traders and experienced traders. If you missed today's levels, ask for a repeat. It's been a great trading market. Make sure you're responsive when we shout out to you, that you respond so that we know what's going on and how we can help you. You got it, Fred. I'll ring you up in about 5 minutes. Hey, Linda, let me know if you're back. Prasad, I'm sending it out to you now. Hey, Warren. Warren R. Hey, Warren, sometimes you're at the, based on how they come in, I sometimes miss you at the bottom. So I just wanted to shout out to you. And thanks for being part of Sol's service. Hey, Chad, how you making out? Those that are joining us on the outside, join us on the inside. Just click on the link. I think right now you see the one for pitiq.tv, PITIQ dot TV. And if I miss anybody, apologies. I'll be in the background if anybody needs me. Post your telephone number if you want me to reach out to you personally and privately. We do trading consultations for individuals that are part of Sal's family, the monthly. So sign up and strap yourself in. And again, if you need a trading platform, let us know. Hey, Newton, what did you get a chance to sign up for Sol's monthly at the discount? That's the first step. It's $100, lasts for a month. Come and go as you please. Sure, I'll give you a ring up. And or if you want to post them in here, you can. And Don J, how did you make out yesterday? We'll try. But also let me know if you took advantage of the discounted price. And that's for everybody out there. It's usually $3.79. You save $2.79. If you can't spend 25 bucks a week, then at a minimum you can't stay here. Hey, quick shout out to Jeremy. Hey, Jeremy, are you back? Let me know in chat, Jeremy. Hey, a quick shout out for those that are joining us on the outside. Click on the link, join us in Zoom. You know, we start here at 9 a.m. Eastern Time. We start to set our levels right around the cash open at 9:30. This is an opportunity to really concentrate on trading the S&P 500 E-mini for your own account. If you need trading software, let us know. If you want to learn a price action trading technique and look to develop consistent profitability, that's what we look to do on a daily basis. You are connecting to Sal Shaul, who is a CME Group floor member, which is a big deal. Look up the CME Group online, the trading pits in Chicago. He's been trading for 25 years or so. He is actively scalping, trading the S&P 500 E-mini for his own personal trading account. He's also teaching and mentoring a select group of traders to trade like he does, based on his trading technique, the one that he has developed and honed over the last 25 years or so. So this is an opportunity for you to be your own private trader. We can help you set up your software. We can help you get started. If you're an experienced trader and you're really looking to start to bank money based on trading, you just haven't been able to do it yet, we can talk about that privately. So sign up for Sal's monthly. It's 25 bucks a week. It's usually $379 a month. And actually, I haven't done this calculation. Let me do this calculation. You think I'd know it off the top of my head, right? Let's see here. $379 per month divided by 4. So it's 25 bucks a week versus $94.75 a week. So that's interesting, right? So anyway, that's where we're at. So just let us know. The link should be there. It says join us live in Zoom. Log into pitiq.tv, PIT and I for Indigo, Q as in was Bond's guy named Q? Q as in quiver. Quivers with a Q, I think, right? .tv. So quick shout out to who? Hey, Linda, you back? Just let me know in chat, Linda. Jeremy S. Let me know if you're back, Jeremy S. Hey, Fred, nice talking to you on the phone. If anybody wants to move from Saul's monthly into his personalized trader mentoring, then let us know and we will have a private conversation. I'll be in the background if anybody needs me. We're glad to help you out. And thanks for joining us.